Are we on the brink of a market upheaval?
That's a pressing question. With economists like Joseph Wang, Michael Gade, Jeff Snider, and Mitch Beexler diving deep into today's turbulent financial landscape, we have answers.
And here's the best part. We've cut through the noise to bring you AI-powered summaries of their essential insights, saving you hours of research.
So let's dive in. You'll find out what the latest economic data means for your investments and where the markets may be headed next.
Today, we're exploring Joseph Wang's insights on new tariff policies introduced by President Trump and their implications for the economy.
Joseph highlights that President Trump's recent announcements mark a significant shift in trade relationships.
Joseph Wang reflects on the introduction of a 10% minimum tariff on all imports, which has sent equity markets into turmoil.
He further suggests that the market is currently underestimating the impact of these tariffs on economic health.
What does Joseph Wang say about the immediate market reaction to the tariffs?
He states that the equity market quickly plunged, reflecting panic among investors after the tariffs were announced.
How does Joseph describe the current state of economic data?
Joseph reports modest negative growth as indicated by GDP nowcasting, coupled with cooling labor market signals.
What insights does Joseph Wang provide regarding the political implications of these tariffs?
He suggests President Trump's base sees these tariffs as beneficial, particularly for blue-collar workers.
According to Joseph, what can we anticipate about market volatility in the near future?
He predicts that the market may face further turmoil if tariffs escalate, warning about the growth outlook.
Joseph Wang emphasizes the importance of adapting to the new trade landscape.
He advises investors to focus on sectors that may benefit from the shifting dynamics of trade policies.
Today we're discussing market turmoil with insights from Michael Gade, as presented to David Lin. Michael's analysis reveals troubling trends in equity and bond markets.
Michael emphasizes that stock market crashes are essential to stabilize bond yields.
Michael Gade argues that crashes in stock prices are essential to support bond yields.
He references historical patterns where equity downturns typically lead to a flight to safety in the bond market.
What does Michael mean by they crash stocks to save bonds? What does that signify about market dynamics?
Michael clarifies that they refers to market forces, highlighting how collective investor behavior drives market movements.
Why is the market reacting negatively to tariffs, according to Michael?
Michael points out the absurdity of traders being surprised by tariffs, given Trump's long-stated intentions.
What does Michael predict regarding market recovery?
He anticipates a potential whipsaw recovery that could mislead retail investors before heading down again.
What does Michael expect from the market in the near future?
Michael anticipates ongoing volatility, emphasizing that major market swings are likely.
Michael concludes with actionable advice for investors. Stay calm and vigilant of market signals.
He advises watching credit spreads, highlighting their predictive power for future developments.
Today, we're delving into Jeff Snider's analysis on why markets are experiencing significant volatility and how the recent tariffs exacerbate existing economic weaknesses.
Jeff highlights the sharp rise in unemployment and the decline in the services economy as key indicators of stress within the market.
Jeff notes that rising unemployment is not just a reaction to recent events, but a signal of deeper economic troubles.
He points out that the services sector's recent decline, nearing the danger zone, is alarming, suggesting a slippery slope toward recession.
How does Jeff view the impact of tariffs on today's market?
Jeff believes tariffs are the final straw in an already weak economy, causing market panic. Jeff discusses how market reactions involved significant liquidations, driven by panic over potential tariff impacts.
So the algorithms driving these sales are responding to fears rather than fundamentals.
Exactly. The fear of economic shocks from the tariffs outweighed any positive market sentiment.
What broader implications does Jeff foresee for the economy?
Jeff warns that current conditions suggest we are on the brink of a traditional recession, exacerbated by external shocks like tariffs.
What does Jeff predict for the coming months?
He suggests that if economic weakness persists, deeper recession and severe market corrections could occur.
In conclusion, Jeff stresses the need for vigilance in monitoring economic indicators as we navigate these turbulent times.
It's crucial for investors to adapt strategies to acknowledge potential market volatility and shifting economic conditions.
Welcome back to the Trade Brigade's pre-market prep. Today, we're exploring the chaotic state of the equity markets.
The team emphasizes how market volatility resembles the early pandemic days, suggesting a possible capitulation low.
The Trade Brigade discusses that recent market chaos raises fears of capitulation, suggesting indices may have reached a critical point.
The team notes the importance of recognizing technical support levels amidst this volatility.
With the Fed's recent policies, the market is looking for signs of stabilization.
The Trade Brigade highlights that current market sentiment reflects extreme fear, suggesting capitulation may soon follow.
Historically, extreme fear in the market can signal substantial reversals.
As the Trade Brigade emphasizes, the Fed's monetary policy is crucial for market expectations.
They focus on how the Fed's decisions influence market liquidity and investor confidence.
The team discusses how technical analysis can help identify potential market turning points.
According to the Trade Brigade, successful trades will depend on clear stop-loss strategies and managing risk effectively.
Looking ahead, the Trade Brigade anticipates ongoing volatility until clearer trends materialize.
They emphasize the importance of monitoring upcoming economic reports that could affect market direction.
In conclusion, the Trade Brigade advises investors to remain vigilant and adaptable in their strategies.
They stress that robust risk management is essential for navigating the current turbulent market landscape.
Today, we're analyzing the alarming surge in student loan defaults recently reported by the New York Federal Reserve.
The analysis indicates that about 9 million borrowers may see their credit scores significantly impacted.
According to the New York Fed, the default rate on student loans has skyrocketed to 15%, leading to potentially dire financial repercussions.
These default rates could drastically impact borrowers' credit scores, revealing deeper economic issues.
The discussion emphasizes that rising defaults are not limited to low-income individuals, as many higher-income borrowers are now struggling too.
This trend could seriously hinder consumer spending as fewer individuals will qualify for loans.
With rising inventory and falling demand, we're starting to witness significant drops in home prices across various regions.
The shifts in the housing market reflect the widening economic concerns stemming from the student loan crisis.
As defaults mount, we foresee substantial economic challenges on the horizon.
Tighter credit conditions could severely impact consumer spending and economic growth.
To withstand these tough times, borrowers should carefully track their student loan responsibilities and credit score changes.
Homebuyers must remain vigilant about market trends given the rising inventory and falling prices.
Welcome back to the Real Estate Mindset. Today, we're analyzing market turbulence with insights from Mitch Beexler.
Mitch discusses the significant drop in stock indices, emphasizing the overvaluation reflected by the Buffett indicator.
Mitch highlights that the market is feeling the effects of historical declines, particularly driven by overvaluation.
He underscores that escalating tariffs have unsettled investors and led to a severe drop in market confidence.
Mitch states that the stock market has reached a critical overvaluation point.
He cautions investors about potential significant losses if adjustments are not made to strategies.
Mitch notes how rising tariffs contribute to a more unpredictable economic environment.
This uncertainty leads investors to seek safer assets, affecting overall market dynamics.
Mitch foresees that silver and gold may act as safe havens during ongoing market volatility.
He emphasizes that historical patterns suggest a recovery for these assets during financial downturns.
Mitch predicts that further declines in stock indices could be seen as markets react on Monday.
He advises viewers to prepare for heightened volatility as investors adjust to the rapid market changes.
Mitch stresses the importance of knowing where your investments are allocated.
He reminds investors to take a proactive approach in managing their portfolios to mitigate potential downturns.
What a whirlwind of insights we've had today.
Definitely. From Mitch Beexler's take on market volatility to Joseph Wang's views on trade policy, there's so much to unpack.
I found it fascinating that everyone agrees on the critical nature of market volatility and weak economic signals.
Right, yet they diverged on the exact causes. For example, Beexler thinks it's overvaluation while Snider points to economic weaknesses.
And then there's Michael Gade, who believes we need those stock price corrections to stabilize everything.
Exactly. And Wang brings an interesting angle, illustrating how trade policies are reshaping our economic landscape.
If viewers enjoyed these varying perspectives, they should definitely like, subscribe, and share this video.
Absolutely. Your engagement helps us bring these critical analyses from experts straight to you.
And don't miss our next episode, where we dive into global trade dynamics, another must-watch topic.
Thanks for joining us today, and keep those financial insights coming.